Hey there, good morning, folks. Happy Saturday to you. Hope you're having a fantastic weekend coming at you with this week's market wrap video. Last week we talked about the fact that thought as though maybe we were going to have a bit of a choppy week because we were coming up in some areas of price resistance after a pretty nice move up in the markets and expected a bit of some choppy action. And it was choppy, but we did have more of a range than I anticipated, which created some nice day trading opportunities. Um, this week, I say it every week that this is going to be interesting, but the reality is I find every week interesting, right? I find every day interesting, and this week coming up is no exception. We've got some things going on that economically, we're going to get some economic data that could move impact the markets. We've got a G20 meeting going on this weekend. There could be some things said there that may influence the markets. We've got OPEC, which is going to have a March meeting supposedly. That could impact the markets. We've got Mario Draghi, who has suggested that he's going to get aggressive with monetary policy in March. That could move the markets. Lots of different things going on. Here we've got some economic data coming out, and let's just put this up real quick. Um, the significant events that are happening. Listen, Chicago PMI, pending home sales. This stuff is important with the little yellow stars. But, the real events are ISM manufacturing, the petroleum report, right? Inventory supply, jobless claims, and then in the employment numbers for February in international trade. So those are the really significant things that could impact the markets. And I think what we have to think about is, so this employment number is going to be pretty big. And here's why. If you think about it, if we have a really strong employment number, and we had some indications of some inflationary pressures, potential inflationary pressures last week. So if we have a really strong employment number, what is that likely to do? Well, that's likely to put the Fed back on the table for a potential rate hike in March. And just that chatter alone will probably put some pressure on the markets. If we have a weak employment number, I'm not exactly sure how the market's going to react because we have things like J.P. Morgan and Wells Fargo with reports out that we could have a significant chance of going into a recession within the next 6 months. So there's enough negativity out there that what used to be bad news was actually good news, but at some point bad news might actually become bad news. So I'm not exactly sure how the markets would react, but I can tell you this: one of my biggest concerns, and I've indicated that I've been pretty bearish about the markets. I think we're in a bear market, and it may continue. My big concern is employment and the amount of companies that I see announcing potential layoffs or announcing layoffs that are going to happen. And I've said it before, it takes a while for these things to work their way through the system, and that is concerning to me. Earnings were not fantastic this earnings season, so that is another concern. But let's take a look at things technically and see where we're at. So transportation, we're going to look at this a little bit better on the IYT, but we're still coming up into a potential area of price resistance. Let's take a look at retail, and I think this is important. So we had a really nice move in retail, and it's coming up into a potential area of price resistance that has acted as resistance and has acted as support, right? Basically in this 43.69 area. But if we take a step back and look at the weekly, what are we looking at here? We're looking at this long-term dominant trend that we broke back here. And what we've done really over the last 3 weeks is just come right back up into this. And now we're also coming back up into this potential band of resistance. Like we talked about the fact last week that you don't have to pinpoint a price. It could just be this band, right? Between 43.69 and 44.43, somewhere in there. This is going to act as resistance. So coming up into this long-term trend line, coming up into an area of price resistance, I think the onus is on the bulls, right? If they're going to try and get us out of this technically this bad stuff that we're looking at, the bulls are really going to have to step up. And I think that that could be challenging to do because we've had the bulls stepping up for 3 weeks, right? So now maybe they start to tire a bit. Again, this depends. We could have a lot of different things that could potentially move the markets next week. I would just suggest that we're coming up into some areas. Still, we're in a very undecided market with more of a bearish tone. Let's take a look at discretionary, consumer discretionary. Let's back out to the daily. Coming up into the 100 EMA, coming up into this trend line after a nice move higher. This should act as resistance. We've already used quite a bit of force to try and get up to that area. Let's take a look at potential price resistance. Right, we're coming this 75.56. I mean, again, let's talk about a band of potential resistance, and that's right where we're at. So it wouldn't be a shock if we had a pullback off of this resistance, right? Utilities, important to note. I mean, we had a pretty big move to the downside in utilities. I would suggest maybe we're going to come back down here and test this 45.46 area, which could act as support, right? I mean, it could be 45.46 down to 45 even, where we've got the 50-day EMA. Could be a band of support there. But if the markets roll over, utilities will still be an area that people fly to for safety. Let's take a look at the industrials. So industrials have been pretty strong, and a lot of this has been because of what? Because of United Technologies and Honeywell potential merger, a lot of chatter there. So the industrial sector has been pretty hot. But if you think about what would happen if, and I think it's a long ways from potentially happening, and I don't even know that it would, because I think there would be some pretty big hurdles that those two companies would have to get over in order for that to be an approved merger. But if you think about what happens in a merger of two companies like that, you get the honeymoon is over in a short period of time when they start cutting all the overlap, right? They start shutting down factories, they start laying off people and trimming. I mean, so it's not necessarily a real positive thing when you get two mammoth companies that combine, right? There's going to be some pain for the people that work at those companies. So financials, we had a nice little snapback after basically coming down. Let's back it out a little bit. Coming down and testing this long-term trend line, right? We bounced perfectly right off of it. And now we're coming back up into a band of resistance. Really not a tremendously great environment for the financials. The energy sector, we're starting to see some of the impact that the financials have, or exposure that they have from the energy sector. The markets are still coupled with oil, and we saw that clearly on Friday, right? We saw it clearly last week. We got a nice bounce in oil off of rumors of production cuts or freezing and all that, and we got the little bounce, and then Friday we had actually a bit of a reversal in oil, right? And that's what we saw in the market. So they're still coupled together. So let's look at the energy sector coming up into this trend line where there's some resistance. We're coming up into price resistance, which was at one time support. So still, we're still in an energy sector that is in a long-term downtrend, coming up into some short-term resistance, coming up into some price resistance. Still concern in that area. Let's take a look at Home Builder. XLB is building materials. Coming up still, we're within this band of resistance, right? Acted as support here, acted as resistance here. Back it out a little bit. So still have a trend line that we're going to have to deal with if we can get through this 100 EMA and this potential price resistance. We'll talk about biotechs on the IBB in a minute. Volatility, we've had, volatility has pulled back after we spiked up into the 30s. We're getting a little bit of a pullback, but there was still some decent action to be had in the UVXY. UWTI, right, triple long. If oil were to break out, UWTI does offer some nice opportunities for a day trade. Keep an eye on the dollar. If the dollar continues to strengthen, I do not believe that that would be a good thing for the markets. So keep an eye on the dollar. I mean, it did get out here, right? Had a nice little drop, caught a lot of people because everybody's been talking about dollar strength. And this bad boy got whacked, caught some people on the wrong end of it. But we do appear to be recovering a bit. USO. Right, we broke over this shorter-term trend line. I'm not going to lie, it does look as though we could be putting in, at least we're stabilizing, right, in oil. There are some calls out there, though, that oil could go to $20 a barrel, and that is concerning. If oil goes to $20 a barrel, we're going to see some big blow-ups in some companies that are probably struggling with some significant debt. So oil is something you absolutely have to have on your radar. Silver, silver has had a pretty tremendous pullback. Could be pulling back to an area of potential price support, right? Somewhere in this area here, about $11. You could see some support in silver. We're going to go over gold in a second. I do feel as though gold is really just kind of biding time after the big run that it's had, consolidating, and probably, if we continue to experience weakness in the overall markets, you could likely see gold continue to move higher. So TZA is, the small bear, 3 times bear for small caps. Now, we've had a tremendous run in the small caps. And that, of course, because of that, you're seeing TZA pull back fairly significantly. But it is coming up into this band of support on price, and look at where it closed on Friday, right? We closed right here on Friday, and it looks as though maybe this could hold as support if the IWM does roll over, and I think there is a potential that that could happen. You're likely going to see a nice bounce in the TZA, so it's worth having it on your radar. Let's take a look at the TLT. We've got a pretty clearly defined area of support in the TLT at this 128.82 area, right? It was resistance. Now it's acting as support. We could see it pull back to this 28.82, 128.82, and then bounce. So keep an eye on that as well. So T2108 and T2107, indicators that if you've been following, I pay close attention to. Look at where this thing has gone. This is the percentage of stocks above the 40-day moving average. Remember when it was down here and I was saying, boy, we're at some pretty significant levels and due for a bounce in the markets. Guess what? We have had that bounce, and we're getting, look, we had a little gap and go kind of parabolic move here. This is not the place where you start loading up on a bunch of longs, right? This is the place where you start looking at your portfolio and you say, okay, where do I have some profits, and you want to start trimming your profits. I'm not suggesting that you sell it all. I want to be very clear, especially in your long-term portfolio. Don't sell it all, but take a look at everything and say, okay, where do I have some nice profits, and start trimming. Build some cash in the anticipation that we may be coming up to a time when we're going to get some cheaper prices on things, okay? Or you may even want to look at going into some bearish ETFs. You never know, right? So this is a time between 60 and 70. I mean, when you get up into 70, that's really the time to start making sure you're locking in some profits. But we've had a pretty tremendous move here, and that also gives me a reason to be somewhat cautious. T2107, percentage of stocks above the 200-day moving average. If you look at it, we're coming up into this potential trend line of resistance. We're coming up into an area of price resistance. See how this is acted as support, and it has also acted as resistance. So another reason to be somewhat cautious. Let's take a look at the SPY. Again, this 195 area has been a big area for a lot of the big money managers, a lot of people on TV, and it was a big area for me. I mean, it's an area that we needed to try and take out with conviction. And we've had a pretty tremendous run up into it. On Thursday, we were able to close over 195, but it was not with serious conviction. Okay, if anything, I'm thinking that we are a bit on the tired side. This does not mean that we can't come up and test 197.89, where we've got the 100 EMA, or we've got other price resistance that has acted as support. It doesn't mean we can't come up and test 2,000. What it does mean, though, is that is not the time that you want to start loading up on swings and longs. Okay, this is the time that you want to be cautious. Day trades, scalps, just I am leaning on the edge of caution because I see too many indicators out there that give me a reason to feel that way. So S&P 500, can we get up into this trend line? Can we test 2,000? It could happen. The fact that we did not close above, I guess we did close above 195 on Friday, huh? Okay. Still not a very convincing move. So I would be cautious with the S&P 500. Let's take a look at the SMH. Coming up into the 100 EMA. Here's this band of resistance and potential support, right? There's the support, which could then act as resistance, basically 51, right? We got 50. We've closed above it. Coming up into 51. Look at how this acted as resistance back here, then acted as support, resistance, and coming back up into resistance. Let's see what else we've got going on here real quick. Nugget. Okay, so let's take a look at Nugget. Had a tremendous move. And here's what I'm looking at with Nugget. I'm thinking that, we've got a band of basically support somewhere between $48 and, $51.30, okay, in this area. Or $52 even. I mean, we're kind of right at it right here, this area. This could act as support. If it fails, maybe we come back down here into this 48 range, and then that acts as support. Okay, we've had a pretty nice run. It's time to consolidate and work off some of that overbought condition. Let's take a look at Labu. So we're going to talk about the biotech industry. It hasn't been doing a whole heck of a lot. I've been saying that we need the biotechs to participate. We need to have a really good run in the bios, and if we're going to see the overall indexes continue to move higher. They're going to have to participate. They are struggling, and until we see a real strong move to the upside in the IBB, you're not going to see a whole lot of action in LABU. Doesn't mean you can't get some quick day trades in it, though. On a shorter term time frame, there are some nice trading opportunities there. JNUG, you know, the junior miners, 3-time bull. Look, we're consolidating. Look at where we're at, right? We're at this price resistance, and you know, we could come all the way back down to 55.29, somewhere in there, right? Or 50. And there's the 200-day simple moving average. Got a little price support or resistance there, which should act as support. You know, we need to just kind of work off that condition, but we could get some nice trading day trading opportunities in JDST and Dust if you continue to see some weakness in gold and the miners. But I wouldn't be holding those overnight, right? These are strictly day trading opportunities in JDust and Dust until we get some more clarity on where the overall markets are going. Let's take a look at the transportation index, the IYT, coming up into the 100-day moving average, 134.04, actually 134 basically, right? Acting as price support and now resistance, right? If we can't take that out with conviction, you're likely going to see us pull back down. You know, let's take a look at the weekly on this. You know, we broke this long-term downtrend. We did manage to reclaim it, but we've had a pretty significant run coming up into that band of resistance, so it wouldn't be a big shocker if we were to pull back down, right? And if we break this trend line, it could get ugly fairly quickly. Let's take a look at the IWM. We talked about the small caps. It's had a nice run, and last week we talked about coming up into this area of price resistance at 103.50, basically right in that area. It's acted as resistance in the past, and it has acted as support. But if we back out to the weekly, we can see that we clearly broke that long-term dominant trend. And look at where we are. We're coming right back up into an area of price support, which will now be resistance, and trying to reclaim a long-term trend. So even if we reclaim it and we get a little spike here, right, that could be the time that it's trying to suck people in, as opposed to, you know, people doing the wise thing and getting out after this big run we've had. So don't get sucked in to if we reclaim that long-term trend line. It could be a temporary deal. Okay? So be cautious in the IWM. Let's take a look at the IBB. So IBB, you know, we have this nice little bounce. And where did we bounce from? Let's back it out. Look at the weekly. We bounced off this trend line right here, right? Which is this longer term trend line that was very gradual. We bounced off the 200-day simple moving average. We got out of the lower Bollinger Band, but we have not had a significant run in the IBB. It's just kind of meandering, right? And we've got this band of resistance between 266 and 276. If we can get through 266, maybe we come up, we test this 276, and continue to move down. Make no mistake, we are in a short-term downtrend in the IBB, and it's guilty until proven innocent. So be careful in the IBB space. I do want to highlight Hack. You know, we talked about the cybersecurity sector a couple of weeks ago, said it felt as though it was a bit overdone. We're looking forward to Palo Alto Networks earnings, which were very good. Gave another boost to the cybersecurity sector. You got the IRS, which announced that, you know, their hack may be significantly worse than was originally disclosed. So, you know, a lot going on in that sector. I would not recommend chasing any of those names at this point in time. We've had a nice run in the markets, and if the markets roll over, 90% of stocks are going to follow what the market's done. But it's been a pretty nice move. I do think HACK and CIBR, I think that sector is important and will be for a long time to come. I think that, you know, if you get some sale prices in that sector, those are the kinds of things that you maybe look to put into your long-term portfolio, because I think it's an index that's going to be around, or it's going to be an industry that's going to be important for quite some time. GLDX, you know, like I said, we're really just looking for these to kind of consolidate, maybe pull back to an area of support. But if the markets roll over, you can be rest assured that people are going to flock into gold and the gold miners. So I think it's important to keep on your radar, but understand that it may need a bit more time to consolidate. You might get some more pullbacks to areas of support, and that could create some opportunities in dust and J-Dust, just short-term day trades. Let's take a look at the NASDAQ real quick, coming up into resistance. Here's that band of resistance coming up into that. And also coming up into the 50-day moving average. So next week is kind of a big week, right? Let's see what happens. Well, we had Warren Buffett, I think, this weekend. We got the G20. We've got all these different things that are going on this weekend. We've got some earnings again coming out next week. I've said it before, earnings have not been fantastic this earnings season, and we still have some more coming out next week, which could give certain sectors a boost or give them a drop. But overall, I'm still very, very cautious on the markets. I do think that we have technically we have some significant challenges, and I think fundamentally we also have some challenges ahead. So be careful out there. Don't be greedy. If you got some gains, make sure you lock them. Build your cash. And that's it, folks. That's all I've got for the Market Wrap video this week. If you, I'm going to be doing a Stocks to Watch live video tomorrow morning, 8 a.m. Vegas time on Ticker TV. Hope you can make it. If you've got some stocks or indexes that you'd like me to take a look at, or have a different set of eyes on them, you know, email me, text me, and I'll be sure to try and get them on the live session tomorrow. If you can't make it to the live session, I hope you'll watch the recap. And if you can't do that, then I hope you join us in the Trader's Den. I'll tell you, the Trader's Den is really turning into a pretty awesome little thing. We've got a good group of people there. We've got a lot of newbies that are trying to learn, but we've got some pretty decent traders in there as well. And everybody's trying to help everybody. You know, go to the blog, look at the testimonials on the Trader's Den tab. You know, you don't have to take my word for it. There's plenty of testimonials there, and I'm continue to get more and more that you know, this is really helping people, and that's really what it's all about. So, all right. Enjoy the rest of your Saturday. I will see some of you dedicated people tomorrow morning. Just kidding. I'll see some of you tomorrow morning, and then I'll see the rest of you again next week.